flows, and that's a hard number in ETFs. To get that number up is very difficult. This was the greatest launch of all time. I've never seen anything like it in 20 years that I've been covering ETFs. It broke all the records. It's still breaking records. And so I really just wanted to let you guys in on what's going on in the TradFi world and where all this money's coming from and what you should know about it. I think that's the best thing we can do here on this panel. So let's start with who are these people, right? There's 40 billion. We can see some of it in 13F filings, but who are the faces behind the flows? Institutions, advisors, retail, give us a sense of that. We'll just go right down the line. And Gio is futures, so all his answers are going to be about the futures market. Jan and Robbie will do the ETF. Go ahead, Robbie.
Sure. Well, first, Eric, as you know, the flows are back in a big way. And there's a very simple reason for that, which we'll get to in a moment. But first, your question on who's buying. It's been interesting to watch this shift over the course of the 16 or so months that we've had these ETFs in the US. At the outset, it certainly was predominantly retail. Now, retail means a lot of things. In this case, it meant all the way from pretty small dollar to ultra high net worth. Significant number of individuals holding $100 million plus positions in IBIT, for example. But then you also have the two other segments that are really important here, which is wealth advisory and institutional. And what we've seen is this pretty striking pattern where every single quarter, the percentage that's in retail goes down, and the percentage that's institutional or wealth advisory goes up. And what's happening is just a longer time cycle for those latter groups to adopt. And it's not happening all at once. It's not a sudden switch flip kind of situation. But we're seeing it pretty steadily, and it's a big driver of some of the behavior and the flows we've seen particularly recently.
Just real quick, ETFs have $10 trillion. About 70% of that money is advisors. Advisors are the people who manage all the boomers' assets, and the boomers have all the money. So the gateway to that money is what the ETFs tap into. Just want to give people some clarification. Institutions, pension plans, endowments, they have like 100 trillion. They're even harder to get that assets, but we've seen some inroads there. I think all the Bitcoin ETFs have every institution represented in it already in the first year, whether it's insurance, endowment. That said, it's still a small number. But Jan, those advisor assets, right? That's the main audience eventually for this ETF. You think maybe 40, 50% of the holders will be advisors? Where do you see that going?
I mean, eventually. I think we're still early days in terms of adoption of Bitcoin for traditional investors. I think it's just so early. I compare that to gold. Gold is like the nirvana. So this year, gold inflows into US ETFs is about 14 million. Bitcoin is sort of much less than that. And what buyers like higher prices. That's not a big secret. But I think what's happened to gold this year is a contrast from a macro perspective as well, which has been, it's a real breakthrough. I mean, we've talked about de-dollarization, but Trump's tariff scare, that he put into the markets, have really goosed demand for gold. And listen, not everyone's paying attention to what's going on. I just did a Twitter poll 2 weeks ago after talking to investors, and the question was, which asset hit all-time highs this year? Gold, Bitcoin, neither, or both? And in your own mind, I know this crowd knows the answer. The question is, how many got that poll correct? Shockingly low number of only 1/3 of people who answered the poll. It was a good number. Identified that both had hit all-time highs this year. So again, gold has been bought by foreign central banks, foreign institutional investors. Everyone wants to get away from U.S. Treasury risk. Bitcoin is so far away from penetrating those dark rooms where the big money lies. Now, sorry, long answer to your question about the wealth channel. I think we're seeing the beginning of adoption, but even for individual investors, some of the biggest retail brokerage firms wouldn't allow the sale of Bitcoin ETFs, Vanguard, for example, right? I mean, that's a big exception. That's for the first wave, right? Now, if we're looking at financial advisors, long ways to go before most allocators include Bitcoin, and we can talk about why, into their portfolios. A long ways to go, and kudos to BlackRock for doing some of that.
By the way, you're probably thrilled Vanguard is banning Bitcoin ETFs, aren't you? Listen, a VFZ, a Vanguard-free zone, is coveted in the ETF space. You can charge more fees and get more assets there because Vanguard is a brutal competitor. But Gio, let's talk about futures. They came around first. You have more traders, institutions. What's that market been like over the past year?
Yeah, for sure. I mean, we first introduced Bitcoin futures back in December of 2017. Right? At that time, we designed those products with ETFs in mind. We thought that ETFs would come 6 months later or so, but it took the futures-based ETFs about 4 years to come to market, and certainly the spot-based products, coming to market last year. But we'd like to think that the liquidity that we built, the trust that we built in our products. CME is a 180-year-old institution. We've been helping institutions, individuals hedge risk across major asset classes, and of course entered the crypto space in 2017. But those products really become sort of like the benchmark. The liquidity of those products really helped the ETFs launch. Some of the work that we did in terms of establishing information sharing agreements with the spot markets and the ability, say, to surveil those spot markets, I think helped the SEC in first approving the futures-based products and then eventually the spot-based products. But it's also interesting to learn how these markets are all interrelated. The ETFs have been extremely successful. They've been successful on the back, say, of futures, but then also so have the spot markets because all these markets are related. If you consider, say, a BlackRock product or a Van Eck product, they all need spot for their spot-based products. So what happens is that liquidity providers, authorized participants for those ETFs, lean on the liquidity of the futures contracts to lock in a price. They then have about a day or so to deliver a physical coin to the ETF issuer. So then they work out of that futures position into a spot market position, either trading at some of the centralized exchanges or OTC. So very some symbiotic relationships. If the ETFs are doing well, it means that the futures are doing well, and it also means that spot is doing well.
Now let's follow up with that. The United States hedge funds, right? If you look at the owners of the Bitcoin ETFs, about 25% are owned by the biggest hedge funds in the US. Some of the most famous names. What they're doing isn't necessarily going buy and hold, right? They're not going long like an advisor, where they're doing what's called the basis trade. And maybe, can you give us insight into the hedge funds keeping the pricing between spot, derivatives, and the ETF all in line? Because all they're doing is arbing that, which I think is good. That way, wherever you're buying Bitcoin, you're not getting a price that's a little out of whack with something else you could get.
Yeah, for sure. I think when you look at so what the ETFs help to do, right? When you consider say traditional macro hedge funds, we really didn't have access to the crypto markets either by mandate. They couldn't trade spot. So with the introduction of the spot crypto Bitcoin and Ether ETFs, it really allowed those macro hedge funds access to this market. So a lot of these hedge funds, if you look at those early 13F filings, you tended to see a lot of these large hedge funds. And essentially what they were doing is, if you consider a futures contract and what a futures contract is, a futures contract offers a leverage, if you will, right? So it's you can think of it almost as a financing trade. So anybody that's offering you a futures contract, and in case of our contracts, they're month-long contracts, that other entity in terms of pricing that is thinking about what's the price of spot today, what are the borrow costs, if somebody's going short, how much is that going to cost me, what is the cost of dollars, how much is that going to cost? So that forms the price of that futures contracts. So futures contracts tend to be priced at a premium to spot. So with a lot of that cash and carry trade or basis trade essentially entails buying the ETF and then shorting futures against that. And when you do that, you're locking in that differential. That differential has moved around a lot. If we look at early 2024 with the launch of the ETFs, that basis was running around 20% or so. Fast forward to this year, the basis collapsed a bit. It was sub 5% for a while. So at those levels, that trade starts to become perhaps a little unattractive for some market participants. But we've seen that basis jump back up, and currently it's now running about 8 to 10%.
Okay, so let's talk about the tariff tantrum is what we're calling this sell-off, by the way. So stocks were down. I've always thought that Bitcoin, this is just my view, was, like high beta. Like if stocks went down, Bitcoin would go down worse. That's why I've always said it. I always consider Bitcoin and the other altcoins to be somewhat hot sauce. So you would use it in small portions in your portfolio because it moves a lot. It's about 3 times more volatile than gold. That said, couple like 8, 9 days there was a decoupling, and lately it's almost really it has acted like a real alt, a safe haven. And my theory on this, and I want to get your take on my theory, is I feel like the holders got better. The price of Bitcoin was pretty stable during the sell-off. It only went down about the same as stocks. Then it started going up when stocks were down. That stability, it occurred to me that over the last 15 months, you saw a huge transfer of Bitcoin from like governments who didn't want it, FTX, refugees, lawsuits, GBTC unlock, just not good holders. And these were called dumps. And the ETFs and Michael Saylor bought all the dumps. Because if you add up all the buying and selling, ETFs plus Saylor, everybody else was a net seller. And Saylor's not selling. And the ETFs only saw about 3-4% of all their assets leave during the sell-off. So my theory is the price is going to get more stable and more safe havenish because the holders are getting more stable. Thoughts?
Well, I think it's a good theory, and
I won't read into that.
well, I think there's a lot to this, right? So the transfer from less stable hands to more long-term fundamental is definitely happening. So I agree with that. I think there's a larger dynamic that's really interesting here, which is if you or anyone who says, Bitcoin's going to be levered beta to equities, the only reason you would ever say that is because sometimes you see it in the trading data, right? It makes no fundamental sense. And yet, when it's repeated enough, it can actually become a little bit self-fulfilling, right? I think anyone would have a very hard time, standing on stage and debating why that actually makes any sense. It doesn't. But it's become something that reflexively now can happen because enough pundits and research outlets and other commentators have said it like it ought to be so. So what happened with the rally out of the Trump Fed dynamic was that decoupling, just one day of Bitcoin fulfilling the role that many have said that it would, which fundamentally makes a lot of sense as a scarce global decentralized asset that's detached from economic, political, monetary risks of any particular country. It behaving like that was an incredible switch that caused a lot of the capital that had been sitting on the sidelines trying to figure out, well, fundamentally, this feels like it should be a diversifier and a hedge, but sometimes it trades like it's levered beta to NASDAQ. And if it's that, I don't need it in my portfolio. But if it's this, if it actually is a diversifier and a safe haven, then I absolutely need it in my portfolio. What surprised me was that just one day, Eric, of that, and all of a sudden the flow machine came back on in a massive way like we've barely seen since these ETFs launched.
Jan, you
I wanted to give a little context to this discussion. I think there's a lot of great points there, but I as a historian like to look at data points in terms of decades, not days. And I just want to kind of clarify, for the audience, the correlation between Bitcoin and traditional assets until COVID, until 2020, was like 0. And since then, it's just been much higher. It's 0.4 or whatever. So 1 being perfect correlation. So I don't know if we know we're not in the best of area codes right now, or zip codes, whatever the right analogy is, to have this higher correlation, which is, I think, why we're focused on it in this discussion. So I think it's a really important thing to watch. I would love it. It would be fantastic for Bitcoin if we reverted to a world where there was 0 correlation, right? It was its own animal. We'll just have to see now if the ETFs, not just in the US, but Canada, Europe, globally, have caused it to be more of a part of global flows on a daily basis, right? And we will never go back to the zero correlation days. And then what does that mean? It means we'll hold less.
Right.
I mean, all investors will hold less if it has higher correlation.
So totally, and more if it's lower correlation. And to your theory, Eric, if you look at just the ETF flows, they have been not phased by some of the equity market sell-offs that also caught Bitcoin up in them. There have been a lot of days where equities were down, Bitcoin was down, even though there was no specific reason why it should have been, and IBIT flows were positive, for example.
I will say,
what drove Bitcoin before, right? What was the market structure? And one of the things you have to mention is just the amount of leverage that was provided into the system. Some of that was by Genesis and different players in the last cycles. And we're starting to we need a lot more leverage, it's weird for me to say that, in the kind of crypto ecosystem, right? And we'll get that, I think, in the United States this year, and I know we're going to get to it later. But so liquidity has been a big driver of the Bitcoin cycles in the past. FTX was the nadir, right? Everyone was out. Everyone had gotten their margin calls. Everyone needed to sell whatever they could. And so that's one thing in the background. That's sort of well behaved right now. There aren't these big liquidity providers into the Bitcoin ecosystem. Tether's a big lender. So it's out there. We have derivatives, the perps market, but it's not nearly to what it was at the height of bull markets.
and you guys both sell gold ETFs, which is interesting. So gold, I know we're at a Bitcoin crypto conference, but you can't deny gold had a big W in Q1. It went up. And there was touchdown dances. They spiked the football, even though Bitcoin still crushed it over like the last 2 years. But it definitely had a good quarter in terms of looking like that safe haven early on. You have IAU. Do you have to also pitch IAU to people? Or is that like another person? Do you guys ever get into arguments? How's that work?
Well, generally, the people who are bullish and believers in gold are also bullish and believers in Bitcoin. So I think there's a lot of sort of shared analysis and worldview in a sense. And, we have a lot of great conversations with clients around this. You see various different funding sources for those adding Bitcoin to portfolios. Sometimes it's equities, sometimes it's pro-ratable portfolios, sometimes it's alts generally. But a lot of times it has been gold, where you see some holders where maybe, they were all gold, no Bitcoin. Now they move to 80-20 or 50-50, or in some cases they move it entirely. I think that's less common. So it's a constructive thing actually to have those combined voices in the room.
Good answer. There's a lot of fighting on Twitter, though, at least, I guess, between the gold and the crypto world. It's interesting because you're right, they do share a lot of worldviews. But anyway, I guess they're competing over the same assets. Jan, I want to ask you something. We just ran into your son. Your son is like, I don't know, he's in his 20s maybe?
28, yeah.
Yeah. And Jan, in my opinion, has been one of the most aggressive people to move into, he is truly from TradFi, but he moved into crypto very quickly, way faster than most TradFi people. And I have to think, your son got into it early. Did that, kind of open your eyes to it? Did that speed up your movement into it? Can you talk about that a little bit?
Sure. People have different philosophies about investing. I was listening to a Warren Buffett interview, and he'll never invest in gold or Bitcoin because they don't generate income. They're not going to grow with assets. He doesn't care about store value. But for Van Eck, is a macro shop. So we kind of look at these big picture trends and what's, not just to chase every fad, but what's happening in the world will affect the financial markets. Americans don't really get that because the equities always go up. But if you live in any war-torn country, Europe, Latin America, you understand that the financial markets are just a subset of what's happening in economics, politics, and technology. So anyway, so you have to, as an investor, and I'm sure everyone in this crowd does this, what's going on out there? What's new? What can I get high returns out of? Or how can I reduce the risk of my portfolio? And, technology is one of them. And it did help to have teenage at the time, teenage boys around, because they were all like buying crypto, right? And their friends were. And they were mining. I mean, they were mining in their dorm rooms, right? And that doesn't confirm a trend, but it alerts you to something. And then the question is, as investors, what do you do to confirm it? So, yeah, I think it did help. And his project, by the way, is a stable coin called Agora. And I'll just flag that not just Van but BlackRock's doing a ton of stuff in the on-chain world as well, which is not the topic of this panel, but it's very much happening today.
I have a tokenization if time. So
Okay. All right.
this is a whole other thing. But Gio, let's talk about the next. What's up next? Obviously, Ether futures, and then the ETF came. Ether didn't do quite as well. I think it's 4 billion today, but it peaked at 12. Just real quick on Ether, bad timing. It went down after it launched. The Bitcoin ETF was just so unusual that it made Ether look a little like a failure. But if you take Bitcoin out of the picture, a 4 billion to 12 billion so first year is amazing. So I'll say that Ether did good relative. It was like silver. It was like silver to Bitcoin's gold in a way. Now we have Solana, XRP, Litecoin, and a variety, Dogecoin, and a variety of others. I think those are the main ones that have true 33x spot Bitcoin ETFs ready. And then there's some futures-based products. But in order to really have a nice ecosystem, you need futures. So where are we at with the altcoin futures, and how are the issuers leaning on you to get them out so they can roll their products out?
That's a great question. I think, for us, we, in addition to futures and options, we also have a family of reference rates covering 24 different coins and tokens, right? So we have these reference rates, and all our products are cash settled. So theoretically, the plan is that we would eventually look to hopefully launch futures on those reference rates. But before we do that, we really do need that regulatory clarity, right? So we need to know that these underlyings are considered commodities, because we're regulated by the CFTC. CFTC regulates commodity products. So we got some of that clarity, or more rather say regulatory comfort earlier this year with some of the changes in the U.S. administration, some of the changes that we're seeing on the regulatory level, some of the cases that have been dropped against some prominent firms. So that gave us some comfort around Solana, also gave us some comfort around XRP. I think when you look at those, and XRP incidentally goes live on May 19th, when you look at those four, Bitcoin, Ether, Solana, XRP, taking out meme coins, taking out stable coins, that's covering roughly about 85% or so of the market capitalization of cryptocurrencies. So, do we, let's assume that we have that regulatory clarity. Do we go ahead and just start launching futures contracts? I think from my perspective, we wouldn't launch them just for the sake of launching. I think that there really needs to be a client demand for those products. I think what we are seeing interest is in perhaps index-based products that consist, say, of the major ones, and then the tail, the next six or so coins would give you exposure, say, to other cryptocurrencies, right?
Okay, let's just do a quick rapid fire with you.
Can I just speak to the ETH launch for a second?
the ETH,
Because
okay.
we mainly get our assets from financial advisors and investors in the United States, and the ETH ETF came out. I said, do not buy this ETF if you don't know what's going on with ETH's market share. You may argue with that phrasing. No one I talked to knew what the hell I had just said, or even to think about that. And so that's got me really changing my mind in that even though we're an ETF provider, we're also an active fund manager. And most people in traditional finance should not be, Bitcoin aside, should not be investing in crypto because they had no idea. I like to point out just at a very simple level that 2023 was the most important year in crypto in the last 10. And I say that because that's when blockchains became cheaper and their usage became reliably cheap. Right before that, gas fees and Bitcoin transaction fees were all over the place. You'd never build on them if you were really a real company. And I think since then, we're layer 2s and Solana, so it's a different world. But did the average investor have any idea? I would say not at all. And so that's where I really think active management, we're going to come out with an actively managed ETFs. I'm talking my own book here a little bit, but I really think that maybe everyone in the room might know what's going on, but boy, out back home, it's tough.
Yeah, but let's, I have this rhyme I created. The further away you get from BTC, the less assets there will be. So as you get further and further into these like altcoins, I just don't see a lot of demand. Maybe there's a flavor of the month. One of them has a great quarter and there's like, oh, let me buy that for a while. But it seems like Bitcoin, like you're talking to some heavyweight investors. Are they looking past Bitcoin, and how far down the chain are they going?
I think overwhelmingly the focus of at least institutional and wealth advisory today is Bitcoin. A little bit ETH. Every once in a while, we get questions about other assets, but I think it's actually a positive reflection, Jan, of what you were alluding to, which is that most of those investors kind of recognize they don't understand beyond Bitcoin.
Mm-hmm.
And the Bitcoin investment thesis is pretty easy to grasp, right? As this non-sovereign store of value and emerging monetary alternative. It's much more complicated for these other assets and competitive dynamics between them. And so most are frankly kind of tuned out of that. Plus, it's a different investment value prop. The comments I made about Bitcoin being fundamentally a logical portfolio differentiator and potential hedge don't really apply to the rest of crypto, right? The rest of crypto, you're making a technology bet. You're making a bet on innovation around blockchain and digital assets, which can be a compelling bet. But that's going to trade, that's going to sit in a portfolio very differently than what Bitcoin does. And for now, the interest, particularly with the state of things, is still overwhelmingly Bitcoin.
So we have this new SEC. Just real quick, do you think they're going to allow ETH staking in the ETH ETF?
I don't want to forecast that.
I just, I'm most
Can
excited.
you answer that too? I
yes.
asked that twice at the conference.
Yes, it has to happen through legislation, and my answer is yes.
Okay.
Through legislation.
And do you think we're going to see
staking?
Yeah. Now we'll go to the next question. Do you think we'll see in-kind creation redemptions in the Bitcoin ETFs?
Well, I think there's a lot of reasons that makes sense from a market efficiency perspective, and so I think we're optimistic on that one.
It's a wonky phrase, but it just helps it's like making the plumbing a little better for an ETF. I'll leave it at that.
There's a lot of risk. Bitcoin is a bearer asset. There's a lot of risk in its treatment, and there's been a major hack as long as as recently as 2 months ago, right? I think the SEC is going to be very careful because under Gensler, they really weren't paying attention to anything and how it really operated. And I think now they realize, whoa, the custody of Bitcoin ETFs is not guaranteed. It's not guaranteed by BlackRock's balance sheet. It's not guaranteed by Coinbase's balance sheet. So there's risks in there, I think. So the SEC will take a little while for that.
Do you see it as a Pandora's box where they're just going to approve everything because Atkins is in charge now and Gensler's out? Like that's sort of the word on the street. We also, our odds approval for like Solana XRP spot went from 1% to 50 just on the election. Now they're now to 70 because there have been no withdrawals and they're going along the line. But I mean, what will they say no to?
Yeah, that's a good question.
Well, firstly, you guys have a pretty good track record, so
Thank you. I appreciate that.
But I would say that those who believed that just because you have a new administration, new SEC chair, like everything goes, I think will be disappointed. I think that there will be a regulatory process that puts frameworks in place around some things that just were kind of undefined before. And in some cases, that may actually make things more difficult in pockets of this industry than before, because there are some thorny questions around regulations, not just all about going from tight to loose. I think I would not expect like a blanket approval of whatever comes before.
We're hoping for a Solana ETF approval. We were the first to file, and we hope they go back to respecting the order of filings. So I just want to ask, I want to ask you, Eric.
Jan was first in line for Bitcoin Ether, right?
and Solana. Doesn't matter.
And they were told, but then they told him to all launch together, and so that's what he's.
That's not the joy. The joy is if Solana ETFs flip ETH ETFs, will you sing that ditty again about going further away from Bitcoin?
Okay, there are some really crazy stuff filed too. So RecShares and Tuttle, and they filed for a Trump ETF, a Trump coin ETF, and a 2x Melania. Who here will buy that? Okay. You guys will probably just buy it directly. Okay. Anyway, but here's my thing on that. You'd say, well, the SEC would never approve that BS. But then you're like, well, that's his boss, dude. You're going to say that the Trump coin ETF is not appropriate for investors, yet your boss has basically launched the coin for retail investors? How's that work? Who wants to touch that one?
I mean, I'll explain, I think, how it's going to play out. Actually, sorry, we're talking our own book here again. But neither of our firms launched leverage or inverse ETFs. And I think we didn't do it because the expected investor experience was going to be so bad, just the way they operated on the inside. But anyway, the way investors are protected from those products is that the broker-dealers in this world, like the CFIs, would not list them or would put a lot of constraints on which of their clients to trade them. So the SEC may approve them, but that doesn't mean that they're going to be kind of easily available. And I think that's the way it should be. It's not really the government's job to say this is good or bad. They've already said that meme coins are kind of not securities, so it's fine. They can be held in trusts. But I do think it's the role of these intermediaries like the broker-dealers to say, well, put those cautionary brakes on, because otherwise, it's the United States. Investors are going to sue.
Well, to be fair, the 2x MicroStrategy ETF is super volatile, and like that you can get that everywhere. I do think, again, further away from Bitcoin you get, Gio, let's say, I don't know, the Trump ETF takes off for whatever reason. Do you then seriously consider futures on it? Like, where do you stop the futures launching? Because the ETFs may actually go ahead of you.
Earlier, I mentioned we need that regulatory clarity. We need client demand. But I guess the other thing that you really need is utility, right? So what is the ultimate function of that particular underlying? And when you consider meme coins in general, there is no underlying function, right? So I wouldn't see us launching something like that. But something that we have noticed, right, when we go back to the conversations that we were having with clients back in 2017, it was all like, what is Bitcoin? What is this about? And when you look at who was trading at the time, there was a lot of speculation. And those conversations have essentially all changed. Now it's really about sort of the utility of not just Bitcoin, but things like Ether and Solana, XRP, right? But we're seeing like having more conversations with hedge funds in particular that are now looking beyond, say, that relative value basis cash and carry trade, and they're also now looking at more fundamental type investing. When you consider the success of the spot ETFs, when you look at, you mentioned MicroStrategy a few times, and other companies that are acquiring Bitcoin, countries that are acquiring Bitcoin, you've got roughly a little bit over 15% that is being held. That's more than $200 billion that is being held. So it's no longer, say, a product that can be ignored. It's not an asset class that can no longer be ignored.
Okay, we have 2 minutes left, and so this is the lightning round final question for you. You got an audience full of, largely crypto natives who want to understand the institutional and ETF world more. What should they look for in the next year? What big things excite you? Start with Robbie and end with Gio.
Can I go last?
You want to go last? Go. Okay, Gio, you want to start?
I'd say a stablecoin bill, and I'd say that Bitcoin crypto becomes an asset class with a 10% allocation.
Wow, that would be a lot. Okay, Jan, that's pretty optimistic.
Can I use my time to do a quick poll? Who here in the audience, quick poll, raise your hand if you think Bitcoin hits newer all-time highs later this year. Just want to see how much the crowd is.
Bullish.
Oh my gosh, before Arthur Hayes, no one was raising their hand. So there we go. Okay. I like higher, more inflow.
Higher, more, back the truck up. Okay, you're going full Arthur. Okay.
Yeah.
Robbie?
I think that the big dynamic to watch is going to be whether this decoupling has follow through. Like we discussed, if Bitcoin is levered NASDAQ, the marginal buyer inside this room, people will still love it, but the marginal buyer who's been on the sidelines to date, the institutional allocator, the wealth advisory firm, the model portfolios, it's not interesting to them. If it actually has zero or even negative correlation in certain critical disruptive events, then it becomes a very potentially important portfolio building block. And so that to me is the story to watch in 2025.
Yeah, and the investors he's talking about, we're talking like well over 100 trillion. So watch for decoupling and hopefully negative correlation. So that's all the time we have. Let's give a round of applause to our wonderful panel here. Thank you for.
Great job, guys. You heard it from Gio, 10%. There we go. Thank you very much, Jan, Robbie. Oh, brilliant. All right.